Hello, what's up, guys? Hope everyone is doing well. Just to check that everybody can hear my voice, please send a message in the chat. All right. All right, all right. I will start and then whoever joins afterwards. The thing is, there's a little bit of a delay, so when I speak, you guys will hear it like 10 to 15 seconds later, but that's fine. All right, so guys, now in this video, I'm gonna quickly go through the pairs that I'm looking to trade for this week, why I'm gonna trade them, why I'm looking to trade them, from a fundamental point of view, from a technical point of view, and etc. All right, and even from an institutional point of view. All right. So the first pair I picked was the NZD yen, and we'll start off by going through the fundamental reasoning behind picking NZD against the Japanese yen. So when I pick pairs to trade, I usually like to sort out strong pairs against weak pairs, or weak pairs against strong pairs. So when choosing a pair to trade, I like to see either weak versus strong or strong versus weak, right? And I avoid trading pairs that are strong versus strong or weak versus weak, because if you're trading these pairs, a strong versus strong or a weak versus weak, you're gonna encounter a lot of false breakouts, a lot of consolidation, a lot of ranges, right? So this is really, really important to know, right? Okay. So why is New Zealand dollar against the Japanese yen a strong versus weak pair? Well, looking at it fundamentally, the New Zealand stands alone as the only major economy without community transmission of COVID-19. This means New Zealand has, I believe, none or extremely, extremely low. No, it's none. They have no COVID-19 cases, if I'm not mistaken, which means the economy is doing well. People are spending, people are going out, shops are open, etc. Japan, on the other hand, Japan has extended a coronavirus state of emergency in Tokyo and other areas for 20 more days, right? So if you guys don't know, Japan has been in a little bit of a panic mode for the past week or so due to the high increase of COVID cases, and this is the reason why you have seen a drop in the yen. So with these extension, what does the extension of the lockdown, what does that mean? That means people are gonna stay inside, shops are not going to be open, less spending in the economy. So overall, this means we expect a weaker yen, right? And just for your guys' information, the Japan was supposed to host the Olympics in 50 days, and now that is really coming into question if they're gonna do it or not, and even if they are gonna do it, if they are going to allow fans and people to watch it live in the event itself. So now we know we have a strong versus weak. This is the forecast from a fundamental perspective, right? Of course, we noted down the economical news events that are going to happen throughout the week that may cause volatility in the pair. So we also have to watch out for those as we're trading the week. All right. So this is from a fundamental perspective. Now, from a technical perspective, right? Since the 24th of March, we have seen the New Zealand, I guess the Japanese yen, moving in an ascending parallel channel. We can notice the respect of the upper trend line over here, right? As resistance, right? It's acting as resistance even over here. And we can notice the lower trend line acting as support. So over here, here as well, and we had some sort of a false breakout over here, which I will get into now, right? So the main first important part is to analyze the overall market structure. So what are we? We are in a big ascending trend line, ascending parallel channel. And what we can also notice in the ascending parallel channel, you see this dotted line, the dashed line in between. This is known as the EQ line, basically the equilibrium line. And we can notice as well rejections from that area as well. Right? So now we have noticed the lower trend line, right, acting as support, the upper trend line acting as resistance, and the EQ line acting as a SNR area, both as support and resistance. Now, due to the external factors, we had on the 19th of May a false breakout to the downside, and our premium members know this as false breakout market cycle 2, where price gives a false breakout to the downside before going in the intended overall long-term direction, right? And if we look a little bit closer, we can notice that the price found support over here with multiple rejections, and since then has been moving in a very strong ascending trend line, right? So we can notice rejections of the trend line and respect of the trend line. Now, we know that the price is back in the ascending channel, right? We notice the rejections of the EQ line, right? We notice that the chart is moving in a bullish overall trend. We notice that the support that the price created is confluences with the 50% retracement level. So if you guys don't know about the 50% retracement level, usually, and this happens more frequently when price moves in a trend, usually it grabs liquidity or creates, as you guys know it, a higher low at around the 50% retracement area, which is basically, if you think about it, halfway through the trend, right? So let me just delete this and this so you guys have a better understanding of what I'm talking about, right? We see price go up, consolidate, right? Respecting the 50% retracement area as support, respecting the EQ line as resistance, grabbed liquidity, consolidated, then broke up to the upside. Afterwards, price went back down, respecting the Fibonacci retracement level, respecting the previous resistance area now as support, respecting the ascending trend line, and respecting the EQ line as resistance. So, are we clear until here on how price is acting? Right? So we have now a new zone, which is this. So, we know since price is still above the 50% retracement and we have not broken below the trend line or the support, that we are still moving in a bullish trend, right? So we can agree that the overall trend is still bullish. Now, how about this minor bearish trend that we have over here? Right? From this high to this low over here. This minor bearish trend. So as we can see that the price moved to the downside, retraced to the 50% retracement, and then came back down, forming a double bottom price action rejection pattern, right? And a retracement to the previous resistance area, possibly converting it into support. Now, we know that between this 50 level, right, which is our resistance, and between this 50 level, which is our support, we have a no trade zone. So why do we have a no trade zone? Because we don't know if price will break the overall trend and continue possibly down to the lower trend line of the ascending parallel channel, or if price is simply forming a higher low to continue back up, right? So how do we make sure, how do we wait for the correct confirmations? Now, if we go back to our, where did I place it? If we go back to our fundamental analysis, we are looking for a strong New Zealand dollar and a weak yen, correct? So if we're looking for a strong New Zealand dollar and a weak yen, we are expecting price to break above and continue heading upwards. We're expecting price to continue with the bullish trend. So what we're gonna do is, all right, now we know that we have a no trade zone. So let's highlight that. So our no trade zone our no trade zone is here, right? This is our no trade zone. We're not gonna trade in this area because right here our area is stuck between our short-term resistance and our long-term trend support. So what we are going to do is we will wait. This is what I'm waiting for. We will wait for a break of the resistance area to continue pushing higher, continuing with the overall bullish trend, formally creating a higher low and continue potentially creating a higher high, right? So this is what I'm looking for. However, if for some reason our fundamental bias changes and we see a break below this support area, below the 50%, then there's a higher probability that price will come down, back down and retest the lower trend line of the ascending parallel channel, right? So we have to wait for the correct confirmation to enter our trade. So what is our confirmation? One more time, a break above, because it will break the 50% retracement of the bearish trend. It will break the current resistance. It will break the AQ line resistance. So we have multiple confluences, plus it aligns with our fundamental bias. However, if we break below, that means something fundamentally has changed, right? And we have a higher probability of continuing down as price is now switching to a minor bearish trend. So does that make sense? And is there any questions? I'm gonna wait a bit because of the delay and see your comments. All right. I think we are good to go to move to the next chart. So this is New Zealand against the yen, NZD/JPY. So let's move on to AED/NZD. We will start off with our fundamental bias, our fundamental analysis. Right? New Zealand, same analysis we had previously. New Zealand stands alone as the only major economy without community transmission of COVID-19, right? However, Australia, second most popular state, Victoria, will enter a 7-day lockdown to counter a fast spreading outbreak in its capital, Melbourne. So, what is happening with Australia? So, Australia most recently, I think it was on Thursday, they have had some COVID cases, some new COVID cases, and they are going into an emergency 7-day lockdown, right? So that means stores will be closed, everybody will be at home, money is not being spent. Thus, we expect a weaker Australian dollar throughout the week. So, if we expect a weaker Australian dollar throughout the week, and we expect a strong New Zealand dollar throughout the week, then we officially have the strong versus weak scenario, right? Now, keep in mind that Australia is still negotiating with the UK on a free trade agreement, and if there's any breaking news on that, that can heavily influence the Australian dollar. Also, let's note the economical news events, right? The interest rate decision. This, I think it's the same. It hasn't changed for years. But we have the interest rate decision, the GDP, retail sales. All of those will be heavily influential throughout the week. So you have to highlight them on your economical calendar and watch and be careful and plan your trade accordingly when you execute, right? So this is from a fundamental perspective. So if we look at the chart from a technical perspective, let me just remove this. We can notice that since early April, since the 1st of April, we have been moving in a very bearish trend with a major drop that happened on the 20th of May, right? So that is noticeable. Now, according to our fundamental bias, our fundamental analysis, we are expecting a weak Australian dollar and a strong New Zealand dollar. That means we are expecting a drop, a continuation in bearish momentum. So, what are we going to wait for? We are going to wait for, we can notice here the most recent impulsive move, right? We can notice the price has created a resistance, price has created a support, right? We are respecting the descending trend line as resistance. So, if price were to break below the current low, right, it will quickly encounter another support area. This area is around 15 pips. Maybe if you're scalping, it will be a good area to trade. But for us intraday swing traders, we are looking for a break below this support, right, to indicate that the bearish trend is being respected and price has merely grabbed liquidity, forming a lower high, right? And now it wants to continue down, possibly forming a lower low. So our confirmation would be a break below this support area, because then it will align with our fundamental bias, it will align with our technical bias as well. However, if price were to break above the 50% retracement area, then it has a clean liquidity to the left hand side, as you can see it over here, to continue moving up and possibly retest this SNR area that we have over here. So we have to be aware of that as well. So if price does break above, then we will adjust our technical analysis, look at the reasoning why price is going above, and adjust our fundamental bias accordingly to the reasons why price is moving and is pushing higher. So if that occurs, then price has a very high probability of continuing to the upside. But I believe that afterwards, this might be just a higher time frame retest of previous support before continuing down, if there is no fundamental bias shift. So I hope that makes sense as well. So just to recap, AUD NZD, looking at the bearish trend, respect of the bearish trend line as resistance, respect of the fib retracement as a lower high, respect of the descending trend line as resistance. We have a current support area over here, a stronger support area over here. A break below would indicate that we are moving in a typical classic lower low to lower high market structure, bearish market structure, and we have the potential to create a lower high. So that is AUD NZD. Pound, let's move to pound NZD. All right. So the pound NZD is a tricky pair to trade. The reason is due to the pound. So this is not high on my priority list. It's going to be a more riskier trade, and I will explain why. So as you guys have known, the pound has been rallying last week because Boris Johnson came out and he said that the UK government is sticking to the plans of reopening the UK on the 21st of June, right? However, the most recent worry about the COVID-19 Indian variant has caused some government officials to worry about the deadline that he has promised, that Boris Johnson has promised, which is June 21st. So due to the worry about this new variant, some government officials are saying that this deadline, or the opening of the UK on June 21st, will have to be delayed. Now, if it is not delayed, it will bring optimism to the market. But if it is delayed, then we can expect a weaker pound, because then the UK is essentially dealing with a new problem, which is the COVID-19 Indian variant, right? So if we read the headlines real quick, the England's pandemic restrictions on June 21st is in doubt. The plan to end them, sorry. This is a quote from the Health Secretary, Matt Hancock. So, as he warned that COVID variant, first found in India, now makes up as many as 3/4 of all cases. So, this is a bad sign already, right? And then, a formal assessment of data on cases and hospitalizations will be published before June 14th. So, they will assess the data. No decision is being taken yet. They're still moving forward with Boris Johnson's plan to reopen on the 21st of June. However, on June 14 or just before June 14, there will be a new assessment of the data, and they will come out with a new decision, basically saying, are we going to open up on June 21st or are we going to delay? So, lifting the remaining restrictions will only happen if it is safe. So this is a very vague sentence, but it brings doubt. So Prime Minister Boris Johnson, of course, has responded to that by saying that he doesn't see anything in the data currently that should deviate him from his plan to open on the June 21st. So my personal expectation is that the reopening will be delayed. And this is why I said this will be a dangerous trade, because I'm basing it on a prediction that hasn't come out yet, But our other pairs, the New Zealand dollar, we have already explained why we think this will be a strong pair throughout the week. And we have our economical news over here that we have to stay aware of throughout the week. So the composite purchasing managers index, manufacturing purchasing managers index, services purchasing managers index, and etc. Right? So if you just go to your economical calendar, you can see that. Now, from a technical perspective, right? The pound NZD has been moving in a very strong ascending trend line, respecting an ascending trend line, and it has been rejecting it every time it has bumped into it, right? As we can notice from the chart. Now, most recently, due to the NZD strength, the pair moved to the downside and found support at around this area, which is around 1.93500, right? But, however, with the plans of reopening the UK, which ironically the UK, Canada, and the EU all announced it at the same time, has caused the pound to rally, right? Because it's optimistic news, obviously, reopening back the country, reopening the economy, etc., etc. Right? So the price has been moving up according to the latest positive news that happened last week by Prime Minister Boris Johnson. However, price has created a 61.8 retracement by our technical chart that we can see over here. And our fundamental bias, we're more leaning against the delay of the reopening, right? So if we do get that news and it becomes public that they're delaying the reopening, then I would like to see a break out of this area that we have over here. If we break out of this support over here, we have a higher probability to continue all the way down and possibly retest the support area, grab the liquidity that is over here. And with a strong NZD, I think this will be a very good push to the downside. Now, before that happens, I expect a lot of consolidation on this pair, a lot of ranges, only due to the fact I think it's gonna rally during the London session and then drop during the Asian session when there's more volume on the NZD. So this decision will make a big difference. But I'm just keeping my eye on this chart, keeping my eye on the news, see if any more concerns come out about the Indian variant affecting the UK. As you guys also know, or I don't know if you know, that France and other EU countries are banning visitors from the United Kingdom over concerns of the Indian variant COVID. So, from technical perspective, in my opinion, if we see a break of this support over here from a technical perspective and we have fundamental validation, we should easily continue down here, easily, and retap this area around 1.935, sort of create like a double bottom, price action pattern, and potentially continue down if the news turns out to be true. So for pound NZD, this is what I'm looking at. Sometimes you use the 50% fib and sometimes the 61. Can you please explain? Yeah. So the fibs, just so you guys know, they're not a rule that I stick by. So in this case, the reason why I used the 61.8 fib is because I found out, like, my fundamental reasoning behind is that we may be still heading in in a bearish trend, and this might be just a rally to the upside due to short-term optimism, right? So I drew my fibs to see if this rejection over here confluences with a fib level, right? Which is the 61.8 retracement. Now the 50% is not a real fib level. It just means it's halfway through, right? So if a trend is moving here and the 50% is here, if it breaks below, then it doesn't mean it's 100%, but there's a higher probability it will continue down. If it respects the 50, then there's a higher probability of continuing up. So nothing is 100% certain. At the end, you're playing probabilities. So even though price over here broke above the 50, right? But it is respecting the 61.8 as a rejection area, and my fundamental bias or analysis is letting me lean towards a bearish pound NZD. Then I am. That's why I'm confluencing it, and this is why I'm looking if it was. If there were any fib retracement levels, if this could be simply a liquidity grab to the upside. But we know that this short-term momentum will only happen due to last week's optimism by Boris Johnson. So the peer or the market or price action in general does not always respect fib levels. Fib retracement levels are areas where the price can pull back to grab liquidity, then continue with the trend, right? I use the 50% area to help me discover if I am still moving in a certain direction of the trend. All right. So that's pound NZD, pound yen. All right, let's look at pound yen. No, sorry, Canadian yen. CAD yen. All right. So, what is our bias on the Canadian dollar against the Japanese yen? So, we have explained why we think we expect a weaker Japanese yen due to the extension of the lockdown, right? But now, why do I feel we will see a strong Canadian dollar is due to multiple reasoning. There is no decision taken on the country opening up as of yet. However, there's a lot of optimism towards it. They're putting a plan, a schedule on when the country should be opening up, how it will be open back up, how it will open back up, and they are considering removing the 3-day hotel quarantine for people that come in. Right, Canada's chief public health officer is bringing a lot of optimism, saying that the COVID-19 case count is at its lowest in weeks, and the pandemic outlook is improving. Furthermore, almost 62% of all adults have now at least one dose of vaccine, and there's just a lot of optimism in the market, right, around Canada opening back up. So, for that reason, unless there will be a major shift throughout the week, I expect some bullish momentum on the Canadian dollar. Now, and especially against the Japanese yen, where the Japanese yen is doing the exact opposite. They are in panic and worry, and Canada is in optimism, right? So, strong versus weak. So, for that reason, I expect bullish momentum on the Canadian JPY. And we have to, of course, take these into consideration. We cannot leave them out. The GDP, employment change, these are things that directly affect the economy, and they will influence the charts. You cannot just follow this bias and forget the economical events. These are very important as well. They will play a major role in the chart. So, highlight them and keep them in mind. All right. From a technical perspective, I think this is when over here, over here is when Japan started heading into the panic mode, into lockdown, and we saw just the CAD yen just completely rally. Now, I believe from a technical perspective that we have broken out of this major range consolidation area where price was just completely moving sideways, right, as we could tell over here. Then we saw a strong break to the upside. Now this has led, after the strong break to the upside, into another consolidation area over here, a range. Now, since we are moving in a bullish trend, and we just broke out of a very long consolidation area, I expect, and plus our fundamental bias, I expect a continuation in bullish momentum. Now, this might happen in one of two ways. Either price comes back to the previous resistance area, grabs liquidity, retests previous resistance, converts it into support, taking out buy orders that were placed here by retailers, and continue up. Or price might just break out of this range over here and continue up. Now, that is said, taking into consideration that our fundamental bias and our economical outlook stays the same, right? Let me just say that applies to every analysis I just did. So this analysis, all the analysis I'm giving, is according to the current economic climate, the current news we have, the current price action we have. So yeah, so this is what I'm expecting for the Canadian dollar from a technical perspective and from a fundamental perspective. So Aud Cad should be now self-explanatory, since we reviewed why we think the Canadian we will see a bullish Canadian dollar, and we reviewed why we will see a weak Australian dollar. Please note these economical events throughout the week, as they will play a major role in Aud Cad's price action. So since we're expecting strong versus weak, the Australian dollar versus the Canadian dollar, we are expecting further bearish momentum on Aud Cad. Now, if we notice, Aud Cad has been moving in a strong descending parallel channel with respect of the lower trend line as support, the upper trend line as resistance, and the EQ line as an SNR area. Right? So if we take, that is from a longer term perspective. If we take a deeper dive, we can notice that most recently price came to the top trend line of the descending parallel channel that is acting as resistance, rejected it, and since then broke the minor bullish trend line it was moving in, and started heading in a bearish direction, creating lows, lower highs, lower lows, and lower highs. Now, since we are expecting a continuation on bearish momentum, then our bias would be a break of this support would increase our probability of further bearish momentum. Now, since we're heading into a new week and a new month, it's still the 30th of May, we can expect some liquidity grabs to the upside before continuing with the overall trend. So this is due to a creation of either a weekly wick, a monthly wick, or just simply grabbing liquidity, taking out retail traders before continuing with the intended direction of the market. So from a technical perspective, we are in a long-term descending parallel channel. We are respecting a short-term descending trend line. We are respecting the resistance area we had over here. We are respecting the current support that we have over here, sort of like a double bottom rejection, right? Price may come back up, grab liquidity, retrace to the 50 or 61.8 or even to the top trend line resistance before going back down and move with the intended direction of the trend. So, unless there is no major fundamental market shift, right, and the economical events play out in our favor, in our direction, then we should see a nice drop on Aud Cad. And as you guys can see when I was talking about the EQ line, right? So, let's move on. The pound Canadian dollar, and this is the last pair that I'm looking at for this week. So, one second, let me erase these. So we've already explained why we think the pound might drop. We've already explained why we expect a stronger Canadian dollar. So fundamentally, from a fundamental perspective, so we can expect a drop on the pound against the Canadian dollar. However, the pound against the Canadian dollar technical price action is extremely choppy. Consolidation here, consolidation here, another range here, another range here, another range here, another range here. So in reality, price could reject at any level within this area, and if you look to the left, you'll find a reasonable support that would support it. So I am not a big fan of this pair, but I thought I'd share it with you anyway. So if we look at I'm just gonna give you a more higher time frame outlook. We can notice that the pair is even in a bigger range, right? However, we don't want to go back to 1968. We want to take a look at where we're currently at. So we can see that the pair is moving in a descending parallel channel, right? Price creates a low, creates a higher lower high, creates a low, creates a lower high, creates a low, and is now creating a lower high on the weekly time frame. And then we can notice that as well, the lower high that it is creating confluences with with our SNR area, which is a previous support area that might be converted into a resistance, right? But since we're heading into a new week, new month, we can expect a top wick to the upside before continuing down and filling in this area over here, right? And this, of course, if this happens, this has to align with our bias of the UK extending the date to reopen, and for Canada to keep on having optimistic news regarding the reopening and eventually reopen. So from an hourly perspective, we said we found it very choppy. So I don't know actually how I'm going to be executing on this pair, but I do believe that we will see a drop over here. So I don't have any plans of execution right now, because as we said previously in our previous pound analysis, which was over here, one second, that it's still until June 14th till we have further information. So I'm just keeping an eye on it. having it on my watch list, right? And see how the bias plays out, and if we have a better confirmation for entry. But I would like to see, from a technical perspective, I would like to see sort of like a weekly wick to the upside, and then if a candle closes down. If this weekly candle goes up, right? Goes up above this SNR area, closes bearish, then I would be heading into next week. I would be shorting this with the aim of filling this area over here. So you look 1 hour chart for support resistance and uptrend parallel channel, right? Entry is also based on 1 hour, 30 minutes, or M15. So there's a couple. It's not that simple. Usually I base it on the 1 or 4 hour, but you have to understand that other than executing and just waiting for it, there's timing, and you need to know the timing. So when is this move? Oops, sorry. One moment. When is this move happening? Is it happening during the London session, the New York session, where volume is high, right? And you start to see like a break of market structure, and then you can enter on a lower time frame because there's high volume, high volatility. Is it happening just before some important economical news, where you would rather wait for a higher time frame candle close just to confirm your direction, instead of just jumping in with the volatility and possibly be taken out with a big wick? So it really depends on the timing. But to answer your question simply, yes, I would wait. If I'm analyzing on the 1 hour and looking for entries on the 1 hour, then I would look for 1 hour confirmations. Right. So yeah, guys, this is the analysis for this week. I don't have anything else. I've been looking at gold as well, so you can see the ascending trend line, rejection, 50% grab, resistance area, previous support, maybe a break above here could push us a little bit higher, but not my main pair. But yeah, if you have any questions regarding the pairs that I just analyzed, you can go ahead and ask them now. Otherwise, that is it, preparing for this week. Alright, so seems like everything is explained well. Thank you guys for attending. And this video will be recorded and on our YouTube channel, so you can check it at any time. Alright, thank you guys.